The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the November 25th, the terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day, and let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know I'm absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email. Send it off to steve@tfnn.com. Inside that subject heading, please put radio show question. Of course, if you are inside our Tiger's Den, and you should be, well, then any and every ping will do. So let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. We got a bit of a mixed bag out here. Got the Dow up 350 points, S&P up 7, NASDAQ 100 off 123, Russell's up 31, transport's up 306, semis down 137, NASDAQ Composite off 98, New York Stock Exchange up 172, gold is up 32 bucks, silver 27 cents, light crude off $1.34, natural gas down 19 pennies. I got the Russell 2000 charts equity future contract that is up on my screen right here. You can see. Well, you can't really see on the daily time frame, but formed a nice little Gartley buy pattern by the D point back here on the trading day of November the 21st with that good old bullish engulfing candle. We also had a new profile that formed that day. And yesterday, price closed above the top of it, 24.1280. We closed above that again today. What that generates is a bullish profile change in trend. That's the daily time frame chart. The weekly says, well, hold your horses here. Why is that? Because prices rallied right up into that green oscillator change line. Yeah, it's a few dollars above it. That oscillator change line printed out at the 24, let me give you the exact number. 24.47 level. We're trading at 24.52. So watch that area. We are up at resistance. Look, I don't have a topping pattern. I've got a negated 30-minute TD9 count. In fact, let's go take a look at the intraday charts for the Russell 2000. Let's switch over to those, see what it is doing, since that's the one that is on fire here. So we'll take a look at the 5-hour time frame chart. A negated TD9 count top suggests a rally towards 24.67. Now, look, I don't have the weekly chart as one of these screens out here, so you've got to remember what was that number, 24.47 or 24.51 right now. Be paying attention to that. The 4-hour time frame chart is going to confirm bar number 8 at 2 p.m. So it'll complete a TD9 count, or should complete a TD9 count top by the end of today's trading session. Got nothing on the 120-minute. When I say nothing, I'm referring to any kind of a topping pattern. 60-minute is going to form a wave number 7 top. Well, it may by 12 noon. That's the only topping patterns that I see out here with regard to the Russell. But the most important one is that weekly oscillator unchanged line. If we take a quick peek at the New York Stock Exchange, its advanced decline oscillator ought to be above zero now with that market breadth that we're looking at. Yeah, it most certainly is. It is above zero. You can see it's at 53, so it's worked off certainly as well, more than worked off that oversold condition. On the New York Stock Exchange itself, it is traded above its oscillator unchanged line, and that is a bullish condition. What is really needed now in order for the markets to have a bullish condition is for that spot VIX to get back below its 50-day exponential moving average. That 50-day is printed out at 1897. We're trading below yesterday's low. So, you should see a further rally inside the S&P 500. But we probably need to take a look at its intraday charts to see what it's doing. So here you've got still mixed signals. Those signals would not be mixed if the spot VIX index were below its 50-day exponential moving average. Let's go back to those intraday charts out here for a moment. Let's go put in, since we're talking about the S&P 500, the ES Mini, let's put its charts in, see what we can find here, see if we find any resistance levels. We're going to try to put that in there. Why is it not taking? There we go. Okay. Well, that was slow. We're not liking that. What the heck? ES. 2. Okay, ought to take this time. So we'll see what the ES Mini is trading out at. You can see on the daily time frame, that's your upper left-hand side, that price run right up into the oscillator and change line. As it's changing colors, you see it just flash from green to red. So we know that the price oscillator is sitting right at 0 as we speak. If price can close above this level, about 67.24.50 or so, you ought to see move to 67.82. But we're sitting at resistance. With regard to resistance or topping patterns out here, the one that is still in play, was in play last night, was a TD9 count top, formed at 4 o'clock last evening, and the key level there on an hourly basis, a close above 67.31.75 would then suggest that we head higher. So you've got the daily oscillator and change line, you've got the 60-minute TD9 count pattern out there. We've got a Rhodes momentum indicator top on the 30-minute time frame chart. So a lot of resistance that price is trying to get through. Now, if we take a look at the S&P 500 from a seasonal standpoint, let's pull that over here. This is the season of the last 25 years out here. The only reason I've got that up there is because we were looking at the 25 years for the Thanksgiving time period. But you can see, we are certainly in that favorable seasonal cycle. That favorable seasonal cycle over the last 25 years has kicked in right around October the 10th. Turns out October the 10th was a big bottom out there for many of the indices. So we should continue to rally up in towards the end of the year out there. We were taking a look at Thanksgiving out here, so we can go ahead and change this to the seasonality piece of it and take a look at the event of Thanksgiving. So we got a number of different events out here, which is very cool. So we'll go down to holidays. We'll go take a look at as soon as I can get my act together. Here's Thanksgiving inside the U.S. Now we can choose. This is going to show us the 10 days before, the 10 days afterwards. This is a 10-year period of time. Let's take a look at that 25-year period of time. We can see that really after today. Tomorrow we're kind of expecting a flattish market, I would say today, with price up at those resistance levels, not expecting things to really break out to the upside. You got the leader in the pack, which is the Russell 2000. We took a look at that being traded into the resistance of its weekly oscillator and change line. That's a 25-year period. Here's a 97-year period. Not much difference there. Again, rallying up into Thanksgiving. And then usually Black Friday, at least on average over a 97-year period of time, has been a Debbie Downer out there before price starts picking up into the Santa Claus rally time frame out there. So that's what's going on with regard to the S&P 500. What else should we look at out here? Quick peek. Let me see. Let's go to the daily equity future contracts. Look at all four side by side out there. ES we've already covered. You can see the NQ. It's really gotten up to the center of its bearish structured profile. So its bearish structured profile is between the zone of 24,944 up to 25,358. And you got that oscillator and change line basically sitting right there. The Dow, you can see the Dow's got a new profile bullish structure, but right now traded right up into its oscillator and change line. So it was the Russell that was the one that was saying, hey, I might be ready to break out. And on a daily basis, I would agree. It's the weekly chart that says, hold your horses. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. Hey, now would be a good time to take a snapshot of the screen that I've got up there at the bottom portion of that screen. And I've started including this little portion here for daily subscribers out there that just simply is easy to find the TAS market profiles, the top, the bottom, the center, for both the daily and the weekly time frame, as well as that daily oscillating change line and the weekly oscillating change line. You can see that it either indicates that it's resistance or it's support out there. So that should be helpful to you. It tells you whether that's above. So in the case of the ES Mini out there, the oscillating change line is above where we're printing right now. You can kind of see that. And that level is at on the daily time frame is at 67.3250. And then you've got also the weekly time frame. Support would tell you that we're trading above the oscillating change line and where support would be. So you've got the Russell 2000 at 2404. If you're taking a look at that, and you can see that matches out to the actual chart. So just grab that. Pay attention to that information today, tomorrow, and on Friday, even though the market's open for a few hours on Friday till I believe 1 o'clock usually. We are not hosting shows that day. So use that information to assist you with interpreting the message of the markets. Let's go ahead and get to some of the requests that have come in. The first one coming in from Tom G. Let's check with my system here. There we go. We're taking a look at Rigetti out here. RGTI is a ticker symbol. And I'm going with yesterday was a buy the D point bottom pattern out there. We've got the A to B equals CD pattern. The actual, at least on this system here, I'd have to fire up my black background system to get the exact number. But here I've got an A to B equals CD right around 2006. The low yesterday was at 2100. Is that close enough? I'm going to go with at this moment in time, yes, and that would be a buy the D point bottom. Now what you've got is price trading with inside its profile, and you've got support at 2450, resist up at 2817. So now what you need to see out here for Rigetti is a close above the top of its profile. In fact, if you look at since the top out here, the TD9 count top on a daily time frame, what we have not seen is a close above the top of a daily profile. So that's really the level for you to be focused in on to the upside, Tom, and that is at 27.91. To the downside would be yesterday's low. Bullish hammer candle. If you close below that, regardless of whether it was a true A to B equals CD pattern or not, you're likely to head lower. So you got to watch that 21 buck even Steven level. The reason why we think it is a bottom, at least right now, is the weekly chart found support at the bottom of its profile after forming a Rhodes momentum indicator top, and the monthly chart found support at the top of its profile, which is at 21.42. So everything is lined up for Rigetti to have bottomed here, but the real proof in the pudding is going to be a close above 27.91, Tom. So that's what I would be watching out there. And I don't know if it's going to close above it or not, but it most certainly needs to do that. And then you'll be above its oscillator and change line as well. You also want to take a look at NVIDIA, which consists of about a million others out there. And we have just short of 1 million people listening in this morning. If we take a look at NVIDIA out here, NVIDIA's got an A to B equals CD pattern, and it could form a bullish reversal candle today. Now, is this one close enough to, the one-to-one price projection for NVIDIA on its A to B is 166.65. The low so far for the day, 169.55. I don't know if that's close enough or not. But first of all, and what's most important here, Tom, is we don't know what today's candle formation is going to be like. So if it is a bullish reversal candle, then maybe I'd say buy the D-point pattern out there. If it's not, then we are trading below profile support. We've got that A to B equals CD pattern. 166.65 would be the target. The weekly time frame, which has a Rhodes momentum indicator top, has support at the bottom of its profile. That's 167.23. Kind of adds to the idea that NVIDIA isn't done, headed to the downside, but we'll wait to see what today's candle formation at day's end is. Now, on a monthly time frame, the month is going to end on Friday, and we've got a bearish reversal candle. That's going to confirm a Rhodes momentum indicator top for NVIDIA. Now, what's holding so far is its oscillator and change line. So come Friday's close out there, you want to watch that level right about 174.63. It's a 63 that I'm not so sure about. The 174, that's pretty solid out there. Do we close below that level? If we do, it's a signal that price might want to pull back to $136, 136.85 to be exact. But we take things one step at a time out here. The first thing is, what's the daily candle? Won't know till 4 o'clock. What is the and then on Friday, where does price close? Does it close below the oscillator and change line? So, Tom, that's what we've got there for NVIDIA. Hope that helps you out. You had one more out there. We got a threefer. So that triple play is QUBT out here. So we got QUBT trading out at $11.13. It's got a TD9 count bottom. Then yesterday it went ahead and followed up and with a Rhodes momentum indicator bottom, both around the same area out there. Not that you needed two bottom patterns. Now that TD9 count bottom that formed on November 14th, Tom, rallied right up into resistance at 1277. So this morning you're getting yesterday you got a Rhodes momentum indicator bottom pattern out there. Price going to likely take on that little sell zone between 1185 and 1277. It would be a close above 1277 that you're really after out there. Why? Just like we took a look at with regard to NVIDIA, or whichever ones we were looking at, look at the tops of these profiles. We haven't seen price close above the top of daily profile. And that's what you need in order for QUBT to give you the all bullish sign out there. The weekly time frame says, I got no clue what the heck you were just talking about there. I want lower price. And it wants to head down to $6.49 out there. It's TD9 count breakout level. It's got a top. It's got that Rhodes momentum indicator top. On the monthly time frame, we're back inside his profile. It's lost its momentum. It hasn't lost its momentum. Well, last time it lost momentum takes us back to about August of 2023 out there. It's an indication that it might want to go tackle profile support at 612. That's not a level that you're worried about right now. Really, the level you'd be worried about to the downside would be the price point of 950. If you close below 950, those daily bottom patterns go away, and you start headed towards 649. But right now, no reason for this not rally for a couple days out there. But 1277, Tom, and everybody else, that's the key number. You get QUBT to close above that, you got some game to the upside out there. Let's take a look at DKNG, DraftKings. This for Nadia in St. Pete out there. Nadia is interested in what is DraftKings going to do for the next 3 weeks or so. Great question. I'll do the best that I can. Here's what I can share with you, and that is that in the daily time frame, you have that nice, first it's got a TD9 count bottom and a Rhodes momentum indicator bottom. That was on the trading day of November the 17th. So your key level of support out here, Nadia, is going to be that low. And what is that low? 26.23. You close below that, you're headed lower. Right now, what price is doing on a daily time frame in DraftKings is taking on a swing point. That's a swing point from November 12th. Volume there, 19.2 million shares. So far, 2 hours of trading, you've done 5.4 million shares. That's about a 16 and a half million share day, going into 19 million shares. So don't know if it's going to take it out. But here's what I can share with you. What the charts will communicate to you, what DraftKings wants to do, is if it can close above that high, 32.03, you'll get an A to B equals CD pattern to the upside. Otherwise, you just have a consolidation on the daily time frame with inside its profiles. If I didn't give you those levels, it's a buy zone between 27.38 and 28.53, and resistance, is at 31.41. That A to B equals CD pattern to the upside would likely take us up towards its TD9 count breakdown resistance level. Should it form, the price point would be about 34 and change out there. TD9 count breakdown resistance at 35.05. That's the daily time frame. What else we got here? On a weekly time frame, you got a TD9 count bottom. That's a bullish signal. So now, we come back from this break. Let's finish looking at DraftKings. Then we'll take a look at HRTX, XPEV, the Hang Seng, Azimil Holdings, CMG for Duncan, Zim, and McEwen Mining for Phil. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. So we're taking a look at DraftKings here. This is for Nani and St. Pete, and their question is, what are the charts telling us about the next 3 weeks out here? So here's how I put these three charts together, Nani. First, if we take a look at the monthly time frame, one, we see that price is trading below profile support at 32.04. Maybe it closes back above that on Friday. You'd like to see that, but the mere fact that it's trading below profile support doesn't have us freaked out or anything, because what we can really see out here is a sideways consolidation that, in essence, has been in place since back in 2023 out there, and price got back to the bottom of that consolidation. So let's call that, if this is truly a consolidating pattern, which it looks like it is to me out there, price got back to that level. The weekly time frame chart went ahead and formed a TD9 count bottom pattern that completed 2 weeks ago. So what price should do is it should move up to 34.1. That's what its intent is over the next several weeks or what have you. The only way that's going to happen is for the daily time frame to break out of its consolidation with inside its profile levels, and that's at 31.41. So I'd say watch 31.41, but really what you want to watch is 32.03. That's the top of that swing point from November the 12th out there. You close above that, and then the markets, and then what the charts are communicating to you is that you should see a further rally. So hope that helps you out in putting that together. Thanks so much for your request. Let's go take an HRTX. This is for Dan inside the Tiger's Den. Dan's looking at that double bottom out there. We'll see that on the very right-hand panel chart. I think we will. We'll see it in the center chart out there. How about that? Let's take a look at the center chart. So Dan's looking at is a swing point on a weekly time frame that took place November the 15th. Volume there, 20 million shares. We tested and rejected that last week with 12 million shares. So that's the beauty. Here's the ugly part of that one, that swing point test. The real key of a swing point test is, 1, testing and rejecting the low. 2, closing above the high of that swing point. Well, Dan, we got a long way to go for that to take place, because that swing point's high is $1.90. Of course, you'd like to see that, because that's, you're trading $1.10. That's almost a double right there. So can we say that double bottom on that weekly time frame, that's it and we're ready to roll? I think the answer to that question is no. So let's try to see if we can come back and look at the daily chart. Oh, I really got to populate this one. Let's do it anyways. It's Thanksgiving. Let's do it. So I don't know how far back that was, but let's put a few years on here. Let's make it 3,000 days. That ought to do it. So it's going to take a moment here. It's got to go back, grab all that data for 3,000 days, put all of Stevie's tools on there. I didn't put the bottom portion out there, so we're not going to see that. But we're just really looking to see what does it. I got to do some scrunching techniques here. Okay, was that the swing point? Yep. Well, not really much better out here, Dan. So the swing point, was that same thing with November 12th, 2024? Let me just make sure. I want to do this correctly. I'd like to do it as long as I'm doing it. That's November. Yep, that's it, 2024. Okay. Well, it's a little bit less of a daunting task, but the top of that swing point, okay, so first that swing point on a daily basis, 10 million shares. That 10 million share day was tested with a nice bullish hammer candle November 19th, the volume there was 4 million shares. So that's a nice test. But to get above that swing points high, Dan, that means you've got to get it close above $1.53. So let's just do this here. Let me, I'll do that during a break. Let me just do this here on the daily time frame. So the daily time frame, we've got a Rhodes momentum indicator bottom that forms with that bullish hammer candle. Okay, so forget the swing point test out there, to help us identify the bottom, because it's got so much work to do to get over at least the top of that daily swing point. We've got another bottoming pattern there, so I just prefer to go with that. So we've got the Rhodes momentum indicator bottom with price trading inside a bullish structured profile. You closed above the center of that bullish structured profile yesterday. You're trading above that again today. It being 110, you're trading at 110, so I can't say it's really above it. But what should take place from here, Dan, is price should rally to 121, the top of that daily profile. And above that, 128 is what you'd be looking at, the daily TD9 count breakdown resistance level. So do we have a swing point test on lighter volume? We absolutely do. Do we have what Obi-Wan had taught us? Not yet. We don't need that just yet, because we got that daily Rhodes momentum indicator bottom. The problem is on the weekly chart, we'd have no such sort of thing. But what we do have out there is what, Dan? We got that oscillator and change line. We can see that has been resistance ever since the week of July 18th out there. So what we know is price is trading right into that right now. Where does price close on Friday? Does it close above the oscillator and change line? The oscillator and change line printed out at $1.10 right now. If it does, that would be a nice little bullish signal to you. That would then say that price ought to rally up towards at least the bottom of its profile. That's the $1.21 level. Turns out the top of the daily profile is $1.21. So guess what we know? We know that if price can close above that oscillator and change line, that's a strong resistance battle that you're going to see take place. What really needs to occur out here for HRTX to tell us that all of this talk is more than just counter trend talk out there. Price is going to have to close above $1.27. That's the center of that bullish structured weekly profile that we've been below for now about 4 or 5 weeks out there. Monthly chart. Let's forget the monthly chart. It's not helping us at all. It is testing that November swing point. It had a volume of 39 million shares, doing it this month with, 37 million shares, pushing down pretty good with volume on a monthly basis. Didn't do so much on when we took a look at the swing point. Wasn't doing so much. So it's the oscillator and change line, Dan. That's really your key out here, and that's on the weekly time frame. Hope that helps you out. Thanks so much for your request. GT writes in, want to take a look at two of his favorite stocks to look at. One's a stock, one's a index, XPEV. And the question is, what's the monthly view? The monthly view has been somewhat sideways-ish on a monthly basis. Prices take it on a swing point from March of 2025. 308 million shares traded hands that month. We're going to finish the month with 356 million shares. That's a bummer. A bummer because if you could have closed above that swing point for March of 2025, 27.16, you would have gotten a confirmed A to B equals CD pad to the upside. You didn't get it. So what do we have out there? When you test the top of a swing point with volume, and we did that, you're likely to go test that again. So I would say that what price wants to do, we'll have to take a look at the weekly and the daily. The monthly chart eventually wants to get back up to test that 27.16 level. The weekly says, you got a little bit of time before we're going to get back up there. Maybe not. You got a weekly basis. You got a TD9 count and Rhodes momentum indicator top. What we also have is new profile that formed last week. And the bottom of that profile is at 2058. We are at 2068. Let me make sure. 2068. So watch 2068 come Friday. Price may have found support just by getting back to that profile level. I say may because last week we closed below profile support. So if we close below that again come Friday, that's telling you lower price. It's not telling us to where just yet, but it's telling us lower price. The where part, I think, would come from the monthly chart, and that's its oscillator and change line printed out at 17.98. The daily time frame out here, what do we have? We just have price getting back to its breakout level, which can be a bottom. The breakout level is 20.01 out there. We're trading, where's its profile? Bottom of its profile is at 2061. So we're trading with inside its profile. Its next resistance point would be 2139 out there. XPEV, you were looking at the long-term time frame. The monthly says eventually you'll get back up to test that swing point that we just reviewed. Steve Rhodes with TFNN. We'll take with the Hang Seng, Asma Holdings, Chipotle, Zim, McEwen Mining, and anything else that's come up along the way. Steve Rhodes with TFNN. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Just to finish off XPV, I want to make sure I gave this out. I don't recall if I did. Bullish structure, daily profile out here. You've got a buy zone between 2061 and 2138.39. Your price close about 2139. Odds favor a move up towards oscillator and change line. 2258 and above that, 2371, the top of that new profile that formed yesterday out there. So hope that helps you out. You also wanted to take a look at the Hang Seng out here. So let's pull those charts up. During the break, I got a question from Mary, and I received a question like this before, and Mary's question is basically she's saying, when I started out my show, I share a couple of things, such as the one that she's asking about. Don't be a prisoner of your past, be a pioneer of your future out there. And she asked, does that come from any kind of story or anything along those lines out there? What was the inspiration behind that? Well, what I would share with you is I think that's probably one of the most important messages for each of the people that are listening on this show right now that trade stocks. Why is that? Because you can get into a stock, you got the greatest setups. Everything says things should go higher or things should go lower, and it does just the opposite of that. If you're going to take it personally, you're going to become a prisoner of your past. You're not going to put on the next trade, all those kinds of things, so that's really one of the reasons, Mary, that I share that piece of it. The actual story that it comes from dates back centuries ago, and it's really with regard to Thai monks. This is a true story, at least it's purported to be a true story that I once read. And the story goes like this. There's two monks, Thai monks. Thai monks, by the way, I think they're the most conservative. They're not even allowed to touch a female out there. They're not supposed to. And so these two monks, they're walking down this dirt path to go into town to get some goods, and they come across a area on this path that is just a big, huge puddle. And there is, of course, a woman that's standing there in this beautiful, long white dress. She too going to the going into town, but there's just no way that she can walk through all this stuff without messing everything up. So one monk goes ahead, picks her up, carries her over, puts her down. The two monks were having a nice conversation before that. They didn't speak a lick of anything all the way on into town. They didn't speak even into town. And on the way back, as they got back to that puddle, the monk who carried the woman over the water said, what's wrong with you? They said, you broke our vow to touch a woman. And his response was, Well, yes, that is my burden. But whereas I picked up that burden and I set it down, you continue to carry it. Why? So don't be a prisoner of your past. Always be a pioneer of your future. So, Mary, that's where that story comes from. Hope that entertained you for the morning. Let's take a look at the Hang Seng out here. And GT is trying to understand, hey, what is the Hang Seng telling us? Well, first of all, on a monthly time frame, when we get to Friday, it's going to complete a TD9 count top at its, you can see the trend line resistance level out there. That trend line resistance goes back to its high from back in January of 2018 out there. So that's a pretty bad-looking thing. When I say a pretty bad-looking thing, what I mean by that is price should pull back to its oscillator and change line, and that's at the 23,742 level out there. The weekly time frame says I've got no problem with that. Why is that? It's got a Rhodes momentum indicator top. Price is trading below its oscillator and change line. Now we can see out here is you can see the sideways move. So what we have is really just kind of a sideways consolidation at this moment in time. That consolidation would be broken if price could close below 25,145.34. So that's the number to be watching out there for you, GTE. The daily time frame really shows us the sideways consolidation pattern as well. The key number on the daily, though, is we've just seen a 2-day rally, and it's taken us right up into that oscillator and change line. So we've rallied right up into resistance at 26,075. When we turn back down from here, you're going to go back and test those recent lows out there. Don't know whether it would take them out. Red oscillator and change line tells us that in this case here, it just changed from green to red, that the price oscillator just went from above zero to below zero. And if we test and reject that level out there, we turn back down, we start trading below this morning's or last night's low out there. The number to be looking at is 25,740.54. That would be the signal that we are headed lower. So that's what we see with regard to the Hang Seng. Thanks for your request, GTE. Let's go take a look at Azamil Holdings. This for Mohammed. Mohammed writes in and is interested to know where this is headed to. Well, the daily time frame has got that A to B equals CD pattern out there, Mohammed. And what you're looking for is you're looking for a bullish reversal candle. We don't have that just yet. We do have a 2-day rally, and price might rally right up into the bottom of its daily profile. And that's at 1,012 cents out there. Could it do more than that? You know, it could. And the reason why it could is because the weekly time frame, which has a TD9 count top, was that negated? Let me find out. Not that it matters. It doesn't matter. Let's not even worry about it. Why? Because you got a Rhodes momentum indicator top back on November the 7th. What price did last week was it closed below its oscillator and change line. Maybe that was a false break to the downside. You'll know come Friday's close out there. The number to be watching, let's just call it 985. If price closes above 985, it's really 985.83 on my screen right now, then that topping pattern may have bottomed. Just getting back to support and holding. We don't have any kind of topping signal on the monthly time frame. We just have price getting back to its prior highs out there, but you're trading above profile resistance and a oscillator change line. So no damage there. No damage really on the weekly because you're also trading above profile resistance. So it's the daily, Mohammed, that you're really looking for to give you some kind of signal. And right now we just don't have it. But if you did get a bullish reversal candle, you would have a Gartley buy pattern. So hope that helps you out. Let's go take a look at the next request that came in, and this is coming in from Duncan Steve. Wants to take a look at Chipotle. CMG is the ticker symbol. So let's get up here. I can see I'm falling behind, so let's speed things up, Stevie. Chipotle trading right now inside its profile. That range between 32.13 and 33.25 out there. With regard to bottoming signals on the daily time frame, I don't know. Doesn't look like a finished A to B equals CD pattern to me, so I'm going to hold off on that. If we take a look at the weekly time frame, I don't see any kind of a bottoming signal out here. What we do have is priced, well, I take that back. There's the A to B equals CD pattern. So that has completed. What you're looking for here, Steve-O, is a bullish reversal candle. Short of that, we just have a consolidation with inside its profile. It ought to make its way up to 33.67, but it's got a pit stop at 33.25, the top of that daily profile. That was a daily, 33.67. Is the top of the weekly profile. Monthly chart looks horrible. I can see an A to B equals CD pattern to the downside. Needs a bullish reversal candle to confirm a bottom. So the daily has got that same A to B equals CD. It's got to confirm by the D point bottom. You'd like to see the weekly do the same, or at least close above a oscillator and change line. So that's what's going on with regard to Chipotle. Let's go take the ticker symbol ZIM. Let's pull that up on our screen out here. ZIM, did I get to that? I did. Perfect. Okay, so we take a look at Zim. This is on a daily basis for Dunk as well. It negated its daily TD9 count top that formed 3 days ago. That's bullish. Just wants to continue to trade higher. The weekly says the same thing. You're trading about profile resistance, and you're trading into a swing point from back in May 23rd. Volume there, 48 million shares this week, and it's going to be a shortened trading week here at 14 million shares. Kind of light volume, light in the loafers. Nonetheless, we're going to suggest, because the TD9 count top is negated on the daily time frame, price wants to go rally towards 2080. On the monthly time frame, you got a sell zone between 2122 and 2479, with 2383 being its TD9 count breakdown resistance level. So that's your resistance zone. Daily says I want to rally further. Weekly says I want to rally further. Monthly says let's go, boys. Up, up, and away. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back. We're looking at McEwen Mining. We can see it's rallied right up into the oscillator and change line for its daily time frame fill. That is your first key level of resistance. That's currently at about 1747. Above that on the daily time frame, 1796 is the top of its profile. And if you can move above that, you ought to see a rally up towards 2066, the TD9 count breakdown resistance level. You've got to sell the D point top. The price did find support at its breakout level, 1566, so that can be a bottom. The weekly time frame is a TD9 count top. Price was able to test the buy zone about 4 weeks ago. That's between 1423 and 1542. It needs a close above its oscillator and change line in order to get upside action. 1759 is the print, but remember, you're looking at 1796 on the daily time frame. The monthly chart could form a sell the D-point top on Friday. You got a bear sash candle now. It just depends on how this trades for the next couple of days out there. So you got tops, but you also may have bottoms out there, and those bottoms need to be proven to you. And the way that gets proven is taking out resistance levels, and now you've got those areas. Let's go finish out the show by taking a look at ticker symbol APP out here. This for McGuppy. McGuppy, you got a nice TD9 count bottom pattern on a daily time frame that completed yesterday. Price trading with inside its profile. It is trading inside the buy zone of that profile. That's between 532.07 and 544.93. Resistance, profile resistance that is at 560.77. Of course, we can see yesterday's rally ran right up into that oscillator and change line, and it's pulled back. Now, the volume yesterday to the upside was about 5 million shares. So far today, in over 2 hours of trading, 1.2 million shares. So you are trading, pulling back with a little bit lighter volume. The weekly chart, Rhodes momentum indicator top out there. But you'd like to see this close on Friday back above the bottom of its profile at 529.36 to suggest that last week was a false breakdown. And on the monthly time frame chart, price is holding this oscillator and change line. So the key here for you is going to first be about 558, let's call it, followed by 571. You get above that, you're off to the races. Folks, thanks so much for joining me on Terrific Tuesday. If you are traveling, it is the busiest day of the year, so be safe out there. And tune in tomorrow, 11 a.m. sharp. Short of that, have a terrific Tuesday. I look forward to seeing you again soon. Take care and be safe out there.